Welcome to All Things Finance. In this video, I will be talking about money market. So in this video, you will be expected to learn the following. What is money market? The types of money market securities, the characteristics of money market securities, and the difference between money and capital market. So what is money market? Money market is a component of financial market where financial instruments with high liquidity and short maturities are traded. They are used to facilitate the transfer of short-term funds from individuals, corporations, or governments with excess funds to those who have deficient funds. At the wholesale level, it involves large volume trades between institutions and traders. Meanwhile, at the retail level, it includes money market mutual funds bought by individual investors and money market accounts opened by bank customers. Here is Bob. He's a recent college graduate and plans to save up for a trip to Europe in 12 months. He wants to spend his savings in an investment where it is safe, considered highly liquid, and short-term because he's going to use it in 12 months and gives him an ability to sell anytime he wants to. So as his friend and a student of finance, he asks you for an advice. So you present to him the types of money market securities. So what are the different types of money market securities? First is a treasury bill. A treasury bill is commonly called as T-bills. They are short-term debt securities issued by the government. They are normally issued when the government needs to borrow funds from the public. Since T-bills is backed by the government, it is virtually credit risk-free. However, it gives no coupon or interest income. Next is a commercial paper. A commercial paper is a short-term debt instrument issued only by well-known credit-worthy firms. It is typically unsecured and offer a fixed interest rate. The maturity of a commercial paper usually lasts 2 to 270 days. They are usually in a lot of $100,000 and an alternative to short-term bank loans. The third type of money market security are negotiable certificates of deposits. Certificates of deposits are issued by large commercial banks and other depository institutions as a short-term source of funds. They are guaranteed by banks and sold in a highly liquid secondary market but cannot be cashed in before maturity. Maturity ranges from 2 weeks to 1 year and has a minimum face value of $100,000. The next type of money market security is a banker's acceptance. A banker's acceptance is a short-term money market instrument used for international trade. They are usually guaranteed by the bank. The next kind of money market security is called a repurchase agreement. It is commonly called as repos. It is a form of short-term borrowing for dealers in government securities. In this case, a dealer sells government securities to investors usually on an overnight basis, and buys them back the following day at a slightly higher price. It is also a common tool of central banks in open markets operations. And lastly is a euro-dollar. A euro-dollar is a US dollar denominated deposits at the foreign banks or at the overseas branches, typically in euro. Because they are held outside the United States, euro dollars are not subject to regulation by the Federal Reserves and pay slightly higher interest rates than government debts. Having said all of this, Bob decided to choose and invest his savings to a commercial paper since they are safe and highly liquid and short term, and it gives him the ability to sell anytime he wants to. So Bob says thank you to you as a friend and an expert of finance. So what are the characteristics of money market securities? The top 3 characteristics of money market securities are its liquidity, safety, and rapid maturity. Liquidity because they can readily be bought and sold for stable prices. Safety because of their liquidity and the nature of the lenders, money market securities are safer than any other types of securities. Example, the treasury bills or T-bills that are issued by the governments and are backed by the credit of the government. And lastly is its rapid maturity, because they all have maturities of 1 year or less. Now let's move on to the difference of money and capital market. Money market offers debt instrument and has a maturity of 1 year or less. Meanwhile, capital markets offers both debt and equity securities. However, it is only limited to long-term maturity. Do you know any other differences between money and capital markets? Comment down below. Thank you so much for listening, and if you enjoyed this video, click subscribe, like, and share to anyone you know who are interested in money market. Happy investing! Till next time, see ya!